Hello guys, good evening one and all. Been a little while since we've done a stream, so I thought why not get in, see how you guys are doing. Hope you're all enjoying the bear market. We're still rumbling on from the looks of it. It's going to be a bit of a slow sort of news week. There's not a huge amount happening until Friday from the looks of it. Some bits and pieces, but Friday you've got the non-farm payrolls, so it's interesting. Sort of forecasting a fair drop from last month. 528,000 last month jobs and 300,000 this month forecast, so we'll see. But other than that, not too much going on. UK market shut today, so just European and US movements. Yeah, drop a comment, let us know how you're getting on, if you got any questions or anything, or just to say hi. Hello HC, alright, hello Mr. P, good to see you. How you guys doing? Keeping an eye on lots of stuff at the moment. So you got the all-powerful dollar. Does seem to be all-powerful at the moment. Look on the sort of, even on the longer term, that's, what's that, a full year of basically nothing but up. So you look at your FX impact figures if you're on Trading 212, and it looks very, very strange. If you've got US holdings, you sort of, some of them sort of 15%, 20% up just on FX. Good to be out of the pound. Worth remembering, sort of hasn't always been like this. You sort of look on the longer time periods. We've been much higher than this and much lower than this. Look at the 80s when they were sort of trying to stem inflation and all sorts. Yeah, got up to 165. Sort of just about 165. So yeah, to be talking about 108 as sort of crazy highs is not all that uncommon. It was there in the sort of dot-com bubble as well, higher than it is now. But in the sort of 08 recession, you were down in the 70s. So yeah, we've had more sort of violent moves than this. Suppose you guys notice your FX impact sort of helping you along. Hello, Sick Buffalo. All good? Mr. P, what are your thoughts on index funds? I don't have any in my portfolio. You have a Vanguard, S&P and all-world high dividend yield. Now, I'm not very all that keen on the high dividend yield one, to be honest. It sort of doesn't seem to perform all that well over the long term. I do want to have more sort of index funds. Sort of don't, while I've sort of got an awful lot in crypto, I've just been sticking to individual stocks, but sort of longer term, if I largely get out of crypto, you know, my sort of targets on that, then I would be looking to be sort of, I keep thinking in my head, 40% indexes and sort of 60% individual stocks. I've sort of shown my ETF portfolio, sort of target portfolio before. Hasn't changed all that much really. So yeah, sort of not heavy US, as you can gather, it's sort of fairly emerging market heavy, and sort of a bit of Europe, a bit of thematic ones, the sort of video games, and sort of a few bits and pieces, green energy, and yeah, sort of bit of a mix really. I'm not all that keen on the S&P at the moment unless it sort of comes down a fair bit. So Ryan, you watch every stock and crypto portfolio video. That's very very kind of you. Putting this in the background to hopefully learn. That's the way. I take it. Are you sort of fairly early on in your journey? Hello, Biff. How we feel about the upcoming market trend for UK stocks? Well, not sure we're in any sort of trend really. I mean, you look at the sort of, I was thinking of the FTSE 250 as a sort of more of a UK stock index than the FTSE 100, and yeah, it tracks the S&P sort of a little bit better, but you can't really see sort of where it's going to be going. I think the UK is in for a fairly rough winter with the energy prices and that sort of thing. A lot of the sort of FTSE 250 companies would be presumably impacted by that, more than the sort of FTSE 100 and more sort of global companies, and they'd be sort of more affected by foreign earnings and the pound dollar ratio and that sort of thing. So yeah, I think that's sometimes why the FTSE 100 sort of looks a bit strange sometimes, sort of underperforming, and just, yeah, I mean, that looks horrendous, of course. You get a higher dividend yield, but I'm not sure that compensates for this sort of horrendous performance. Looking at sort of 23 years there of not a great deal of gain. But yeah, I'm not. I kind of think pick the individual stocks out of the UK. And if I was going to have sort of an index, I tend to sort of shy away from the UK indexes. Mr. P, continued semiconductor shortage. What are my thoughts on Nvidia? They seem to be in a sort of fairly rough position at the moment. From what I gather, sort of TSMC have basically told them to get stuffed when they've sort of said they're overstocked and they'd had sort of higher than anticipated stock, not enough customers. They were trying to sort of cut their order with TSMC, and they've sort of told them to get stuffed, basically. I even saw a report sort of saying, basically, if you can't fulfill your order, then you need to either pay up or find someone else to fulfill your order. So I guess TSMC still sort of say, you know, there's a reasonably large queue behind Nvidia, so pay up, basically. Yeah, I'm not all that sort of keen on Nvidia, to be honest. Still seems sort of fairly high valuation for what they're doing, and I think it's sort of more centered around data centers and self-driving cars and AI and that sort of thing. It's sort of drifted away from gaming over the years, so I don't really know sort of where exactly they are. Kind of got out of my sort of area of expertise, really. Lewis, what thoughts about Taylor Wimpey? UK builders usually cut dividends in a recession. Yeah, I suppose if they cut the dividend, there could be a bit of a hit to share price, but I don't really sort of focus on the dividend too much. I mean, I've sort of got it open here because I have been looking at it a fair bit. I don't really need an 8% dividend, to be honest. They could cut it if they're in a little bit of rough times, but they do still have sort of a fair old amount of cash compared to debt. Still sort of fairly heavily cash. They don't show the debt, or the net debt, but they show sort of total debt of 100 million from the looks of it, so 95 million in current debt and sort of 18 million in long-term debt, but what we got, 730 million in cash and an awful lot in inventory of sort of unsold properties. So that's a hell of an amount of net cash. Yeah, I think they can sort of weather. Whether they might just carry on paying the dividend out of cash, I'd sort of rather they didn't. A lot of sort of UK companies don't really seem to be wedded to their dividend like the US lot are. You sort of people moaned about Rio Tinto sort of cutting theirs, and I just sort of think give it out when it's there, and when you need to, just cut back on it a little bit. So yeah, I'm sort of laser focused on it at the moment. I sort of said I wanted it under £1.10, and we're under £1.10, and I'm sort of still thinking about it. Mr. P, what do you think about ASML? I was watching some videos on them, and they have a great moat with their technology. Yes, I can see why you would have bought a share. It's certainly sort of on my watch list, on my doomsday watch list, as I call it, because it's just always extremely expensive. Sort of, I haven't checked it recently, but sort of 35 forward PE, sort of higher than pretty much any of the FANG stocks, other than maybe Amazon. Yeah, sort of agree. Sort of hell of a moat, crazy, really. But yeah, I just kind of think sort of prefer TSMC, to be honest. I think they've got sort of maybe not quite as much of a moat. You've got competitors in sort of Intel and Samsung, but they've got sort of a dominant position and much lower sort of valuation. I think if people sort of obviously look at the Taiwan risk, but I think obviously ASML would be hit pretty hard if something happened to TSMC, so they would all fall. I expect sort of even probably Intel and Samsung might take a hit because they can't necessarily just fulfill all of that, and it would just be seen as a big hit for the semiconductor industry. So yeah, I think with ASML sort of not being immune to any of that, I'd rather just go with the lower valuation of something like TSMC or sort of Samsung. Ryan, so you're relatively early on, but you were involved around the GME saga and lunar death spiral. Wow, that is quite the introduction to the market. Hope you didn't lose sort of too much on any of that lot. It's a real shame, I think, that sort of got a lot of people involved in sort of stocks and shares, and probably did get people involved in crypto, but I think crypto people are sort of more prone to losing, but certainly a shame that got people into stocks. What are my thoughts on RR? Rolls-Royce, I take it. I'm not all that keen, to be honest. I've sort of had it on my my sort of long-term stock list before, and still kind of would, but sort of want to see a bit more sort of profitable quarters from them. They were sort of revenues coming down and profits coming down sort of well before the pandemic. Not looking all that good, and yeah, sort of then that hit them pretty hard, and I think a lot of their downside has sort of been blamed on the pandemic, really. But I think if you look at sort of 2018 to 2019, even into early 2020, they were sort of looking pretty bad as it is, and yeah, I'd want to see a little bit more sort of sustainable profit before I got in, and I don't know pretty much anything about the sort of little nuclear reactors and stuff that they're talking about. So again, sort of not really my my area of expertise. So Marcus, do you like iShares UK divvy 10%? That That seems quite high. Don't know what the iShares UK. Oh yes, I looked at this one before. Take it they're not giving that the. Oh yeah, so they're saying 6.4% yield. Don't know if that means they've sort of cut it or all this data is wrong, but yeah, do they give the holdings? Yeah, so it's just a big sort of FTSE 100, pick the dividends bones out of that, really. It's not really for me. I mean, it's basically the top 20, I guess, top 25 of the FTSE 100 largely for this lot. Glaxo I'm not really keen on. Both sort of tobaccos I've looked at before but never really been that keen on. No Shell, of course, no. BP, okay. National Grid, sort of okay, but not really a fan of. Don't like Vodafone. Already got Rio Tinto. Don't really like SSE. Prefer other miners to BHP, to be honest. I think they're a little bit sort of strangely expensive. And Legal and General I've got individually anyway, so yeah, not really all that keen. Prefer to just sort of pick the bones out of the FTSE 100 myself and sort of leave a lot of this stuff alone. As I say, if I was going to sort of have a UK index, probably have the FTSE 250 and just sort of accept that it's much lower dividend, but you get a bit better capital growth. So Edward, thoughts on ADM? I haven't checked sort of where ADM were recently. I sort of sold them at a reasonably high point, and I think they sort of come down and have now got back there again. I think that is higher than what I sold at, but I don't know if they're still sort of riding this sort of shortage in wheat and grain sort of a little bit too high. Yeah, earnings estimates sort of worse for next year than this year. So yeah, 681, but if you're sort of looking at 616 for next year, sort of 91, 616. So yeah, sort of nearly 15 forward PE, and I think they have got a fair bit of debt as well. So 50, yeah, add on 9 billion, so you're looking at 62 billion enterprise value. So yeah, you're probably looking at sort of 17, 18 PE. I mean, you're practically at sort of Google levels there. That's sort of a 21, I think Google are. So yeah, I think that that sort of trade has largely gone. I mean, if anything happens to sort of dampen the war down and Ukraine sort of open back up, then yeah, I think you see sort of prices come down and sort of people less interested in stocks like this, unless you think the war is going to go on for years and years and years. But yeah. Ryan, you made decent on game and managed 800% on Luna. Not bad. And you got out before the end. That's pretty lucky. So Westy, all right. Mr. P, thoughts on Disney stock? Don't have any yet, but may buy a couple of shares soon. With the parks open, Disney Plus, I think they'll do well over the long term. I certainly think they'll do well in the long term, but still struggling to buy. Yeah, where we are. I keep saying I kind of preferred Disney sort of before the entire Disney Plus saga, really. I was quite happy with them sort of, releasing films at the cinemas, making a fairly huge amount sort of per film. Sort of, I keep going back to just before the pandemic, sort of Avengers Endgame. I know it was a sort of big culmination of a huge series, but being sort of best-selling film of all time. People were saying cinema's dead, and yeah, that was best-selling film of all time in 2019. So yeah, then they sort of half scrapped that and gone to the streaming model, which seems sort of more competitive, more expensive, less profitable, and sort of may take 5 years or something to really see the fruits of it all. But yeah, I suppose if you look at 2023 PE, we're back down to sort of 20 PE, which I guess, do you put a premium on it for being Disney? Sort of, again, I keep comparing stuff to Google, but just because it's very high profit margin sort of business, very high moat, so yeah, you kind of have to compare things to other stocks at a similar PE and what you'd sort of be happier to own. I think now Disney sort of competing against 5, 6 major streaming services. It was sort of, I felt better about them, as I say, just competing against other films in the cinema. I think they had a better offering there, basically. People don't necessarily want to pay monthly for a streaming service. Charlie, Google. I take it you mean my thoughts on Google. Yeah, I sort of did make my thoughts known in Discord. Sort of still noticing. If I put Google in, yeah, I have been sort of looking at Google. I think one thing to sort of be aware of is sort of the reducing earnings estimates. So yeah, this looks a little bit silly because of the stock split, but sort of this year's earnings estimates before the stock split, I think we're at sort of 115 or so, 116, and I mean if you times the sort of current 1 by 20 just as a comparison, you've come down from sort of mid 110s, 116 I think it was, down to sort of 102, and sort of next year I think was 133 I think it was, so yeah, 133 down to 117, so yeah, I think we've dropped in price a fair amount, but sort of also dropped in earnings a fair amount. As I say, the Jackson Hole Day last week, they sort of dropped 5% odds, where everything else was sort of dropping 2-3%. And I just think if we are sort of in recession times, advertising gets cut. Google will do better, I think, because people are sort of saying the TV advertising and like newspaper advertising and stuff would get cut well before sort of Google ads would get cut, but still think it'll get cut overall. And yeah, I don't think it's sort of quite as good value as sort of the big drop since sort of the 140s would suggest, or sort of even the highs of sort of 150 towards the end of last year. It's better, but it's not sort of crazy better. Oh, sorry, ADM as in Admiral Insurance Company. I'm not really keen on insurance, to be honest. I sort of have legal and general, but I quite like them for the sort of asset management side, sort of pensions side and that sort of thing, and kind of just put up with the fact that they're in insurance. It's sort of very competitive market, and yeah, just not one for me. I've sort of people asked about Direct Line as well, and just similar sort of thoughts really. So yeah, not all that keen on Admiral. Westy, how do you pick your stocks? Do I stick to industries and companies I know? Is it value or growth based portfolio? You opened your trading 212 ISA, very nice. And put 500 this month. Okay. Yeah, I have my sort of watch list of areas that I quite like. Like I say, sort of quite keen and sort of do a lot of research on things like mining and semiconductors and sort of being in construction. I sort of look at the house builders in the UK. So yeah, they're sort of part of my focus with things like Meta or Facebook, as we used to know them. I'm sort of they've going into crypto. I'm sort of quite keen on the crypto side, so I think a lot of people sort of kind of write that off, and I'm sort of a little bit more keen on it. So I like them. Yeah, and then sort of obviously I look into fundamentals, sort of balance sheet, earnings estimates. I put a little bit sort of more focus than a lot of people into earnings estimates. Don't really care about sort of price targets because that's analysts sort of putting what multiple of earnings they think is correct and sort of various other things. I don't really care about that. I rather just see the sort of base data myself and make my own sort of estimates. So yeah, I like the forward sort of earnings estimates more than a lot. And yeah, that's sort of how I look at them, to be honest. So you're going for Nvidia, AMD, and Meta, etc. Nice. Mr. Patel, thoughts on Zim? Could be a dividend trap. Can shipping carrier? Oh yeah, I've seen this sort of shipping carrier stocks before. Not really something I'd be too keen on, to be honest. I think this is a fairly small cap, isn't it? Sort of 5 billion. 56% dividend. Yeah, it's very nice. I don't know if they give sort of analyst estimates. Yeah, so sort of even looking at next year's much reduced analyst estimates. Don't 100% know whether this is the right currency, sort of not knowing the company if they are properly US, but yeah, sort of just under 3 times next year's earnings could be a potential trap. I guess if they're saying 27 cents, I guess that is per share. Next year's earnings are sort of 14, so yeah, that'll probably get cut pretty severely, I guess, if that all plays out. But it's not necessarily the worst thing. Still potentially sort of reasonable value if it is 3 times earnings. But yeah, not really a sector I'm particularly keen on. Though I do realise Glencore are sort of in this quite a bit more than most people realise. Not really just a miner. Huge part of their business really is the sort of shipping side. Mr. P, can you explain why P ratios are so important? You hear that term a lot in finance stock-related videos. So, I mean, it's difficult to explain, really. It's sort of a metric that you can compare various businesses on, really. It's what sort of Wall Street generally would sort of look at. It's basically if you sort of bought a business and it's sort of 15 times earnings, say, you're looking at sort of 15 years, if you like, if it just happened linearly like that, 15 years, say, to get your money back, or sort of if it rises, maybe less than 15 years. So, yeah, it's sort of something that you would use for like discounted cash flow, really. Sort of how long you're expecting to get your money back, basically. And yeah, like I say, it's an easily sort of comparable method for sort of various companies. You can look at sort of say 3 or 4 companies in a sector, even sort of one, a small cap and a large cap, sort of $5 billion company and a $100 billion company will still sort of both have a similar PE maybe. You can't compare sort of net profit for the two because they're going to be wildly different. So it's a constant that you can use to compare sort of various companies. So yeah, I think that's what would sort of make it important. John, would you mind having a look at MLI? Are we talking Mueller Industries? Been on your radar for a while and would like to know my thoughts. Mueller Industries, I've never heard of them. Manufactures and sells copper, brass, aluminium and plastic products. Piping systems. So a sort of building industry supplier. Interesting. I guess they're maybe struggling a little bit with copper and sort of, not really sure how a copper sort of fitting supplier would fare in a sort of rising copper environment, because I'm very bullish on the price of copper. Whether they would sort of just raise their prices and pass that all on, don't know. But sort of, I guess they're forecasting, analysts are forecasting a lower copper price, sort of similar to the miners. So looking at sort of probably 8 times. Nine times sort of next year's earnings, so not too bad. It's more than the miners. So they give sort of reasonable stats. So the forward PE and sort of trailing PEs are probably a little bit distorted by the high copper price over sort of the last year. I think probably worth sort of looking at those reduced forecasts potentially for next year and just seeing if you're happy sort of even at those levels. Sort of again, profits sort of maybe a little bit distorted by those. I guess they're probably a little bit lower. You might want to look at sort of, if you can, dig out like 2018, 2019 sort of profit margins. But yeah, they sort of look okay, I guess. Reasonably big company. But yeah, I'm not really sort of all that keen on building sort of material suppliers. Doesn't sort of sound as if they do all that much else, unless I'm sort of mistaken them. If you want to give us a bit more detail. Evening, Casper. Are you all right? Westy, are you holding more cash at the moment as some investors are? How long have you been investing to have such a large account? So the large account sort of partly comes from investing in crypto sort of quite a while ago. So that's sort of where part of that has come from. I did sort of have, about 60, 70,000 that came from just saving up an awful lot of cash over the years. Sort of still single, so yeah, I've sort of had a fairly high disposable income for years and years and years. So yeah, that's part of the reason for that. I am holding more cash than pretty much I've ever held since I started investing. Sort of still waiting to sort of deploy that really. I keep sort of saying I'm a bit rabbit in the headlights. I'm sort of thinking I'll wait for a little bit more of a drop, and then things do drop a little, and I still sort of think things don't seem that bad, so there's probably a little bit further to go, and then you sort of start to hear more sort of bearish news. UK sort of going through, probably UK and Europe going through a bit of a rough period, so yeah, I sort of keep thinking there's more to come. Generally a sort of fairly large bear market would last longer than it has done so far, sort of over a year. within sort of 9 months or so. So yeah, it could be a sort of double dip from 2020 and this year. Shouldn't really be timing it, but yeah, I don't really want to sort of just go all in at the moment. So I am holding a fair bit of cash. Hello, Leono. Is there a process I go through when evaluating stocks and shares or crypto? What kind of approach do you take? Obviously, it's a little bit more difficult to sort of evaluate crypto, with there being no sort of earnings to speak of, or debt and sort of cash metrics that you can look at. It's more a sort of finger in the air almost. You can try and sort of look at adoption and sort of where you think the project could go, if it's a useful project, if there's any sort of competition, if you think they can do better than their competition. But yeah, it's a little bit sort of less that you can look at. As I say, with sort of stocks and shares, I'll sort of start if it's an industry that I like really, and then sort of go through their sort of website and sort of their financial reports really, rather than looking at sort of on something like Yahoo just to double check the figures, or rather look at theirs first. Yahoo can sometimes sort of report the wrong currencies and that sort of thing. But yeah, then I'll sort of have a look at something like Yahoo as well, just sort of see what the sort of analysts' estimates are like. As I say, just for sort of earnings, not really interested in their price targets, and sort of see what valuations we're at, and sort of what the stock has done. Sort of if they're like US companies, you can look on macro trends and sort of see where the sort of average metrics are before. So if something's got a 6 PE, you might suddenly think, oh, that's incredibly cheap, but you can look at sort of over the past, and if it's always had a 5 to 10 PE, maybe it does just sit in that sort of range, and that will give you a better idea of what they do over time. So yeah, sort of various things I look at. One last thing, any books or materials you recommend to help with? I do kind of sort of give a cheeky plug to Sven Carlin. I think his sort of course, I've had a partial go through his course, and it seems fairly good. The free course, not the sort of, I mean, you can join his paid stuff if you want, but he does a sort of free, fairly comprehensive course on stocks, so that sort of, you don't have to take everything he says as gospel, but it seems a reasonably good grounding. But yeah, it wasn't sort of, I've never really been a stock book kind of guy, to be honest. 56% dividend, yes, Casper. I'm sure you can get on that, and you'll be well happy for years. Why can't the chip makers ramp up production to meet demand? What is the limiting factor? I think there's sort of a number of limiting factors, really. It's sort of ASML partly supplying the lithography machines. The sort of suppliers, I think, have gone through shortages of the wafers themselves. You've got sort of issues, I think, with the Ukraine sort of conflict. I think it was saying sort of neon is quite a big sort of component used in the semiconductor industry. Obviously, that's been hit fairly hard. So, yeah, sort of a number of different things have sort of come at it from various angles, really. And then sort of, if there is increased demand, it takes sort of like 5 years, I think, to sort of put a new fab, as they call it, sort of factory into planning and design and construction. They're sort of enormous, talking $5-10 billion factories, so they take an awful lot of time to build. So you've got to try and anticipate demand 5 years in advance, maybe. That's not very easy. So yeah, if you suddenly have a demand spike, you might, it could be 2025 until we really sort of get the demand met. Casper, how's my Argo doing? My Argo is doing terribly, of course. I think I haven't really looked, sort of 65, 70% down at the moment. Not all that keen on averaging down. Yeah, sort of still see them as probably back into unprofitability at these prices. Sort of when they were sort of getting to 25k Bitcoin, I thought they'd probably be break even, including all the overheads. But I expect back down to 20, they're sort of unprofitable. So they've sold a hell of a lot of their Bitcoin holding, and yeah, everything's sort of looking bad. Really, a lot of debt. I think they said they paid off some of their Bitcoin backed debt, but they've still got a fair amount of debt. So yeah, unprofitable plus debt is sort of not something that I'm normally keen on investing on. So it just sits there. If Bitcoin can come up, then they should survive. I expect they would survive. They would probably just have to dilute a hell of a lot if they did run into trouble. Obviously, then we would both get hit fairly hard, and it'll be 80, 90% down. So hope we can avoid that, but yeah, still pretty poor, and not something, as I say, I'll be looking to average down on anytime soon. Yes, that was MLI, John. Is SLP my biggest holding, and why am I so bullish with 9k holding? I think it is one of my biggest holdings. The emerging markets ETF doesn't really count, being an ETF. Basically, sort of, it's very, very cheap valuation. If you sort of take the very large amount of cash they've got off, I think you're looking at sort of 2 or 3 times earnings. I can't remember what they're at recently. Come down a little bit. And they might, or not mine, but produce, we'll say, rhodium, which is sort of one of the rarest materials in the world, basically, used in the sort of car industry. I don't think the sort of transition to EVs is going to be quite as quick as everybody's thinking, especially sort of in the sort of less developed countries. So I think there's still going to be a need for the sort of platinum group metals, palladium and platinum and rhodium, for a fair amount of time. And yeah, just think they're sort of very good value, to be honest. Sort of nice little company, sort of, penny stock level, but sort of highly profitable penny stock. So yeah, I just kind of think when the chip shortage sort of ends and we get back to proper sort of car production, then yeah, they should do quite well. There's also a lot of sort of government restrictions around the world on CO2 emissions, obviously on the petrol and diesel cars. So they're basically forcing car manufacturers to use more platinum group metals to lower the emissions, basically, in catalytic converters. So even if you have a lower use of those metals with less petrol and diesel cars, you have more per car, as they try and sort of offset the CO2 more and more. It's sort of essentially, the more you think about it, it's more like the tobacco industry, basically, sort of reduced demand and higher cost per cigarette, basically. But yeah, and you've also got sort of potential in the hydrogen economy. Sort of going forward, one of the sort of better ways of producing green hydrogen is sort of using I think it's an electrolysis method to produce hydrogen, which uses, I think, just platinum. So yeah, the other two metals would sort of struggle a bit, maybe, but yeah, it gives it a little bit of life beyond the sort of petrol and diesel cars. which is nice. So yeah, it's strange to have a sort of small penny stock as one of my largest holdings, but that's kind of why. And Westy, yes, stay single. You've had no trouble doing that. Yes, exactly. Will I be adding any more legal in general? I sort of see that as a fairly sort of steady one, which in the bear market I'm not all that keen to add to be honest. I think there's sort of better value elsewhere, sort of one that kind of seems like it's always going to be probably under a 10 PE. So yeah, I kind of think legal in general would probably be more when I'm selling more, or sort of the bulk of my crypto, and would sort of, it would just increase with all the other positions, but not sort of one that I'm piling into with my, I say limited sort of cash position at the moment. I think I'd be sort of going a little bit more risk maybe, things like sort of Hymax and the miners and that sort of thing. Legal in general sort of seems the more, as you say, nice yield and sort of a more steady eddy. Yeah, I'm not going to sell it to sort of buy more high risk, but yeah, I'd kind of just leave it there untouched. Leona, appreciate it, no probs. Casper, you're pretty disappointed with Argo, but yeah, hold for the long term without adding any more. I think that's the way, really. Yeah, I see other people are sort of averaging down furiously, but there's the potential that, you know, crypto does really well and they go bust. You know, that'd be sort of horrible, but they've got the debt. Or, as you say, they sort of have to heavily dilute and it goes from, you know, 40p to 10p or something. And yeah, then it doesn't really matter sort of what crypto does. Kind of think they were a little bit overly bullish taking on the debt. Obviously, in the middle of last year, we all thought bullish, more debt, bigger factories and everything, go for it. And that didn't quite work out. Nobody was saying be cautious, basically. What are my thoughts on the saying, money doesn't buy happiness? Money itself definitely makes you happier, but you hear a lot of successful people say the opposite. Yeah, I think that's probably the more extreme level of money doesn't buy happiness. You know, if you're sort of skint, getting a bit more money would probably help your life situation a great deal, but I think they're sort of saying, you know, going from well off to multi-millionaire status, if you were sort of unhappy, that isn't necessarily going to solve all of your problems. It sort of creates new problems, if you like. If it's sort of publicly known, then you may sort of potentially lose some of your friends. They get annoyed with them struggling and you being a millionaire, unless you want to give part of it to them. And yeah, it just creates sort of all sorts of problems, really. And, you know, doesn't necessarily mean it'll be very easy to find a lady friend or a partner. So yeah, you get into more sort of issues, worrying about the money if something happens. And yeah, I can see a lot of sort of truth to that, basically. But obviously a little bit more money can help a great deal. Edward, good answer. Yeah, thank you very much. No problem. Always happy to talk about Sylvania. It's sort of, I think it was my little baby, really. If I was to get given 10k tonight, what FTSE 100 stocks would I buy for 5k? Well, it probably would be ones that I already own. FTSE 100, I guess we'd be talking Rio Tinto. Probably not Shell. Just having a look through my my watch list. What else have we got? If it had to be FTSE 100, I guess I might just add to Legal and General or something. I do really like Diageo, but that seems like it's not going to happen until I get out of crypto because it's such a high valuation. What else have we got? Glencore, although Glencore's getting really high now, and as I say, it's sort of turning into a coal miner at the moment, which isn't all that nice. Taylor Wimpey or Barrett? Yeah, probably, let's say Rio Tinto and Taylor Wimpey. That seems nice. They're both that I'm sort of looking to add to at the moment, and sort of nice value. So probably two that I will be adding to. I won't say when because I sort of said that I would be before and I haven't. So at some point, hopefully, Rio Tinto and Taylor Wimpey. Random question. You do get asked a lot, that sort of thing. If you suddenly come into a load of money, what would you do? Not necessarily a load of money, just sort of more a beginner's portfolio amount, as you say, sort of a few thousand or 5,000, 10,000. Mr. P, best investing book you've read? Yeah, it's like I say, I haven't sort of read a great deal. I've had some sort of audio books. I sort of did the Peter Lynch One Up on Wall Street on audio book before. That was pretty good. But yeah, I'm not sort of all that keen on investing books, to be honest. I sort of tend to, you can near enough get the gist of what each investor, how they think in sort of various articles and sort of snippets about them and sort of videos on them before. People like Buffett obviously are very, very well known, so it's fairly easy to sort of get their thoughts. But yeah, I kind of just tend to make up my own mind, to be honest. Hosanov, do you think all the crypto miners will survive incoming tough times? I mean, I think we're in sort of tough times as it is. If they're sort of surviving now, then they're sort of, I guess, biding their time and hoping this doesn't last too long. I think they can all survive if people are willing to sort of put more money in. As I say, they can take on more debt, which is very risky, but they can always sort of dilute, and if people are willing to, they can offer existing shareholders a rights issue. They might be willing to put more in at a sort of discounted price. That would sort of hurt people that don't want to do that, or sort of hurts people anyway, really, because share price would drop. Or they can just do a public offering and sort of offer anybody shares at a discounted price. So yeah, it all sort of hurts the investor. Like you say, I'll go at 40p, they might sort of heavily dilute and sell a load of shares at 20p. It would get them back on sort of a reasonable footing. Sort of they could get rid of their debt maybe and have a reasonable cash position. But yeah, the existing shareholder sort of gets screwed over. Obviously, if people aren't willing to put money in, then some of them could go, I guess. Or just sort of if they've taken on a huge amount of debt, then it might be sort of unsavable. But yeah, I think sort of most of them probably could survive, but doesn't necessarily mean they're a good investment. Like you say, they could heavily dilute, crypto rockets up, and sort of you're still not really made anything overall. Cool answers, Edward. Yes, love the sort of miners and house builders. Westy, you're reading The Millionaire Fast Lane by MJ DeMarco. A great and eye-opening read. I probably will try and sort of get into more audio books, because I do listen to a lot sort of in the car. on the sort of longer journeys, I don't find myself sort of just sitting down and chilling out, sort of relaxing with a book. So yeah, sort of the car seems dead time really. So maybe a few good sort of audio books of the sort of larger investors might be one for me. I'm sort of making the most of music streaming services at the moment with the sort of free trial periods and stuff, but maybe when they end I might sort of get into a bit more audiobooks. They're just a bit expensive sometimes. I've got some of the free Audible trials and that sort of thing and use them on finance audiobooks, but not really all that keen on paying for an Audible subscription. What made you start the YouTube channel when I could be chilling watching Netflix or Amazon Prime? Because you hold the stock, yes, very interesting. I quite like talking about it, to be honest. Sort of quite active on Discord and that sort of thing. I quite like if I can sort of provide any help to people, then always happy to. Yeah, don't really sort of talk about it with my mates or my family. They're sort of not really interested in it, so just nice to have an outlet to of people to talk about it. And yeah, sort of a lot of people are new to the space and need a little bit of information, and sort of quite like helping people, to be honest. Sort of resign myself to the fact the YouTube channel's probably not really going to get monetized, so make a little bit out of free shares and affiliates every now and then, but nothing to sort of write home about. And yeah, monetization is probably not really for me. I don't really go in for the clickbait stuff and sort of some of the stuff that gets more views, so I'll just leave the channel as it is. Do the odd sort of extra educational video every now and then, and yeah, see where things go. I did start a little TikTok account, which has sort of seen very mixed results. Some things sort of blow up and could potentially make a little bit out of there. But yeah, we'll see. You're in the same boat. Yeah, thanks for doing this. Yeah, no problem. Like I say, quite enjoy it. So, okay, we're about an hour. I shall probably say give it a few minutes and see if we get any more questions and call it a night. Thank you, Leono. Yeah, no problem. Keeping an eye on the US interest rates. Sort of interesting to see where they go next month. Basically sort of guaranteed to be above where the previous sort of peak was. They got to 2.4% in 2019 before having to back off. Always think it's worth reminding people the lowering interest rates was before the pandemic started. People sort of see this as all there to reduce rates because of the pandemic, but no, things sort of started to break before then, basically. So yeah, it looks like we're going to get 0.5% or 0.75%. So we're going higher, but I still think we're not going quite as high as everybody else thinks. And on the crypto side, I did think this was interesting. So even with the drop in crypto price, you can see the sort of black line is the crypto price here. The yellow sort of orange line is the amount of Bitcoin on exchanges. So still sort of taking a fairly sharp turn down in August, and sort of whatever it is, 4-year, 5-year lows now. And sort of obviously since 2018, when we were last here, there was 2 million Bitcoin less mined. So yeah, to have sort of 2 million extra Bitcoin and be back at these lows and sort of dropping off exchanges even in a bear market is quite unusual, quite sort of quite different. When they say all exchanges, not entirely sure whether this does include sort of the decentralized stuff like Uniswap and sort of those sort of exchanges, or if it's just, Coinbase and Binance and that sort of thing. But I think either way, this sort of nice to see. Normally you would see a sort of spike up in money going onto exchanges, sort of with the price dropping, people dumping onto exchanges basically. But this shows sort of presumably people are buying it up and withdrawing it. So that was good to see. Any last questions? Thanks, Compounding Investor. Yeah, no props. See, your channel's doing really well. Hosanov, what's your number one conviction, stock or crypto? Crypto, sort of, Bitcoin really, as a sort of high conviction. I do think that's going to do well, but sort of aside from that, I really do like Solana at the moment. Sort of looking to put a reasonable amount more into that. And sort of stock-wise, highest conviction companies, I sort of say, are probably Disney and Nintendo. But sort of as a stock at the moment, I do like my sort of strange ones, sort of, as I say, Sylvania Platinum and Hymax Technologies, the sort of display company. I keep coming back to them and sort of thinking that's got plenty of room to manoeuvre. Sort of people are always looking for a potential sort of 10-bagger. That's at nearly $1 billion now, down to that sort of level. Could easily see it being a 10 billion sort of in a couple of years, 2 or 3 years. So, yeah, that's a fairly high conviction for me. Does the balance of exchanges include hot wallets and cold wallets? That presumably includes neither. This is money actually left on the sort of accounts of sort of Coinbase and Binance and that sort of thing. So if you've got it in your Exodus wallet, for example, that wouldn't count on this chart. And if you've anything on a sort of Ledger or Treasure, wouldn't count on this chart either. So yeah, this is the amount actually on the sort of, say, Coinbase and Binance exchanges. So sort of people thinking if it's on Coinbase, then people are presumably thinking about selling. Hapadapa, have I considered a position in Persimmon? A few people have sort of asked me that. I do sort of have Barrett and Taylor Wimpey as my sort of house builders, and I kind of consider Persimmon surprising that they have a higher valuation than sort of Barrett and Taylor Wimpey. I think Persimmon sort of makes slightly higher profit margin, but it's basically because they're sort of worse houses, without sort of meaning to be nasty to them. Yeah, sort of working in the industry, sort of hear nothing but bad stuff, basically. They're on sort of a lot of league tables as sort of fairly poor in customer sort of issues. A lot of customers have a lot of issues, a lot of defects with the houses, sort of poor customer service when they have to get sort of defects repaired. Supposedly they're not very good, and yeah, they just sort of seem to be cheapest of the cheap, and sort of they make a reasonable profit. But yeah, I don't really want to go for cheapest of the cheap, especially when other house builders are such good value. It's not like you're sort of paying a premium for the better builders. You're actually getting the better builders cheaper, even if they make a little bit less profit or profit margin. Hosanov, what's been my biggest mistake in investing and what's biggest success? I would say sort of biggest success is patience, really. Sort of, I guess the biggest success has been the crypto, basically. The sort of bulk of my cash has come from sort of buying Bitcoin very early and sort of holding through the bear markets and stuff. So I would say patience really is sort of key. Biggest mistake is probably sort of getting, even though I probably don't come off as emotional, sort of getting emotional and sort of caught up in the hype, especially with sort of crypto. It's very easy to see sort of at the $60,000 levels in sort of crypto. It should have been reasonably obvious to take a little bit off the table. I took a little bit off, but not all that much. Could have been sort of in a much better position now. Yeah, so I would think sort of maybe set some sort of goals, and I do try and do this, sort of set some fixed positions sort of in advance, basically, and sort of assess them when they get there, and try not to sort of let your emotions at the time sort of run away with you. Base it on sort of facts more than anything. Compounding investor, bought persimmon at £6 and sold at £8. Sort of £33. Yeah, that's what I mean. It's sort of, they can do that on you. But yeah, just I can't bring myself to be buying the sort of, the Aldi and Lidl of the house builders, basically. It's sort of cheapest of the cheap, poor quality, but they sort of make higher profit than everyone else. It's just, yeah, I'd rather have the sort of one that I can sleep at night with. There's not going to be some horrible scandal about terrible houses. Westy, am I right in thinking you keep your crypto in hot wallet? Various sort of hot wallets, yeah. I keep a little bit on the exchanges, but sort of never really seen the need to invest in a hardware wallet, to be honest. You hold yours with Binance in their spot wallet. Yeah, I mean, if it's actually on Binance Exchange, then you're contributing to this table, of course. As I say, the hot wallets are sort of off exchange, and sort of a nice middle ground between sort of hardware wallets and just being on the exchange. So if the exchanges go bust, then you're fine in a hot wallet, as they call it, or a software wallet, as I call them, and you don't have to pay, basically. There's very little chance of the sort of wallet companies going under. They don't hold your private keys, so it should all be sort of backed up, and you can keep backups yourself. So yeah, pretty good. Any thoughts on impact from the upcoming Tory leadership race? Not really. I mean, it's the same party, so they'll have minor differences in sort of how they want to handle things, but I don't think it's like sort of Labour and Conservatives sort of different effect on the markets. Yeah, I think sort of they've got different thoughts about the energy crisis and that sort of thing. That could have a bit of an effect, but yeah, I don't think all that much. Not, as I say, not like a general election. So I wouldn't really see that as either way. Have you tried to follow the story of the guy trying to retrieve his hard drive? Yes, that's a shame. You have to feel sorry for him. I mean, at the time, I think it was 7,500 Bitcoin. Sort of was worth like 20 quid or something. You just forget about it and bin your hard drive. But yeah, I don't think he's ever going to get it out. The council don't seem to be. I think he sort of said, like, if they dig it out, help him dig it out, then they can keep £50 million or something. And yeah, they're presumably just thinking, if we don't find it, then we look completely stupid. So yeah, I think that's gone. So sort of contributes to the a lot of people say out of the 21 million, there's probably about 4 million so far that is lost and never going to be retrieved. So yeah, leaves you at sort of 17 million in total. How long do you see this bear market continuing? I mean, as I say, sort of previous large bear markets, you know, your sort of dot-com bubble and your 09, 08 recession have sort of generally been a year and a half, sort of maximum 2 years really. So as I say, we've been 9 months, as much as everyone wants to sort of think this is the worst thing that's ever happened in the world. It's not really. Not sure whether you mean crypto or stocks, but yeah, sort of similar in the crypto side as well. 9 months isn't sort of generally a total top to bottom. So yeah, I think we could have a little bit more to go unless sort of US plunge into a deep recession very quickly and they sort of pivot on the rates. As I say, I don't think the rates are going to rocket up to sort of 4% plus that they're talking about. I think we could get to sort of 3% and maybe stick there for a bit if the inflation numbers sort of come down. Last sort of month-on-month inflation number for US was sort of 0%. So if they stay under sort of 0.5%, I guess, then yeah, you start to get more towards a 3% annual inflation rate if you keep doing that for a good few months. So yeah, I think it could be sort of bottom maybe in the next few months, but that's timing the market, isn't it? I think you've got to just sort of at some point take the plunge and hold on. If you haven't caught the bottom, then fair enough. If you have, then marvellous. Okay. So I think we'll leave it there. Been good to catch up with you guys. A lot of guys here, some new. So welcome to you all, and look forward to catching up again at the weekend. Thank you, Happy Dapper, and yeah, I'll just give it a few seconds. See you soon, Westy. Yeah, so thank you for coming, guys, and speak to you soon.